Hi, thank you for joining our channel. My name is Karla Carderera, one of the managing partners at Upfront CPA. I'm going to share with you 5 essential things that you have to have ready before you file your tax returns. So, do you do your own QuickBooks, or do you have your own accounting, or do you have a bookkeeper that does your monthly accounting for you? There are several things that are must-haves and must-have ready before you print your report and send them out to your tax professional to start getting ready to work on your tax returns. So, item number 1, books are up to date and reconciled. What does that mean? Have all of the transactions in your accounting software have been categorized, and have they been categorized correctly? So part of the review process that you should have at least once a month or maybe more often is to make sure that all the transactions that came through your accounting software have been categorized correctly. You have to make sure, because if you don't do that, there's going to be some tax items that will be able to help you in your tax returns. For example, meals. Are you recording your meals properly? There's a lot of different items that can actually make a change once they go from your accounting software to the tax software to prepare your tax return. So that is definitely a must. All of your accounts have to be reconciled. And that is not only bank accounts, that's also credit card accounts. If you have any loans, any car loans, any bank loans, do you have a line of credit? Everything in your balance sheet must be reconciled, because there could be an expense or an item that was recorded incorrectly. Maybe a deposit was recorded twice. Maybe you had expenses that came to the balance sheet to those accounts incorrectly, and the only place that you're going to find those is going to be during the reconciliation process. It's also a must. One of the things that we always tell our clients to double check will be your loans, because the interest portion of your loans are tax deductible. So you have to make sure that when you record a payment for a loan, for any type of loan or a car loan, whatever the case may be, you have to make sure that the principal is what gets recorded in the balance sheet, and the interest gets reported as an expense in the profit and loss. So those are definitely items that you have to double and triple check before you print your reports and send them out to your tax professional. You have to make sure that you don't have anything as an uncategorized asset or liability or expense. Every transaction has to have a category. It's okay if you place them in an uncategorized expense, for example, or uncategorized income until you do the research, but it needs to definitely be done, and that account has to be clear before you print out your reports and hand them over to your tax professional. Another item that we see is if you use the Ask My Accountant line item in your profit and loss, because there is a question that you might have for your accountant, or maybe it's a question that your bookkeeper has for you. You have to make sure that that account gets cleared before, once again, you print out all of your reports. All of the expenses, all of the income has to be categorized in the correct chart of accounts. Item number 2, all income is complete and accurate. So you have to make sure that the income is categorized correctly, either by service or whatever the case may be. But you have to make sure that if you do cash accounting versus accrual accounting, if there's any income that you have to accrue or any expenses that you have to accrue, you have to make sure that that has been entered in the accounting software correctly. So always pay attention, especially towards the end of the year, to make sure all of that is categorized properly. It is definitely something to look at. Maybe you are a business owner that work on your own accounting. You do your own accounting for your business. You have to make sure that if you have any doubt as to you should have accrual, if you should do accrual accounting or cash accounting, you have to seek advice from an accounting professional. They can tell you what your business basically should be, and make sure that you're running those reports correctly in your accounting software. You have to make sure that all of your income, your deposits, and even your expenses have that you have a receipt for your expenses, especially for those large items. You have to make sure that any expenses that you have throughout the year, maybe is it supposed to be a fixed asset? Did you buy a computer? Did you buy furniture? Did you buy any equipment for your business? Make sure that you follow the law and the things that should be categorized as a fixed asset and depreciated, that is entered correctly in your accounting software. That's definitely a big plus and something that everybody should know about and should know the difference. If you are not sure, always contact an accounting and a tax professional that can help you with that portion. Going back to your deposits, as I say, make sure that your invoices are recorded properly. Make sure that you don't have an invoice or any deposits, for example, that are not recorded to income or to a service that you have. But yes, categorizing income properly is definitely a big plus. Item number 3, make sure that the expenses are supported and separated. Just like as I mentioned that in item number 2, you have to make sure that your income is set up correctly and categorized correctly. And the same thing for the expenses. You have to make sure that you have support in case you get audited in case the IRS contacts you and you get audited. That support is a must. Something that we also let our clients know, and we show them how they can do that themselves, is upload the receipts electronically to their accounting software. We are at a firm, we are completely and 100% paperless, but we do put our support in all of our transactions, or at least the ones that are needed, depending on the amounts. But that is a must because it helps you keep your accounting organized. If you have a receipt that you can upload automatically into that specific transaction in your profit and loss, that will save you time having to go back and save it maybe on the share drive or have to send it to somebody. There are definitely different systems or applications that you can use to upload that automatically to the accounting software of your choice. But always take some time to look into those because that's definitely a time saving, and it will help. It will protect you in case you get audited by the IRS and you have to prove support. Item number 4 is payroll, and you have to make sure that as an owner you are compliant. So one of the items that you have to reconcile I would say quarterly, or at least at the end of the year before you make your reports final and close the books for the year, you have to look at your payroll liability accounts. Are they all zero? Have all the liabilities from the payroll transactions have been recorded correctly? And then have they been paid either to the IRS or to the state, whatever the case may be? But those are items that you have to make sure that are zero at the end of the year. And if you have a balance in any of those accounts, you have to make sure that you know what makes up that balance. Therefore, there's definitely a reconciliation that needs to be done for all of those payroll liability accounts. What are the payroll liability accounts? Federal income tax, state unemployment, and federal unemployment. You have to reconcile and that to make sure, again, you have to know what makes up those balances in case you have a balance in those accounts, and that will be your support. Also, you have to match your wages, what you're recording as an expense for wages or salaries or bonuses, that they match to your payroll reports. It's definitely another reconciliation that needs to be done for sure, 100% before you give your reports to your tax professional. The expenses on the payroll side have to definitely match to the expenses on your profit and loss. And that's, again, wages, payments to 1099 contractors, and the company payroll taxes, the ones that are the expense of the company. That needs to match to your payroll report, and that's how you make sure that all of the entries have been entered in your accounting software properly. Even if you have payroll integrated already in your accounting software, you still need to make sure that you run reports on the subledger and that they match on the profit and loss, just to make sure, because systems are systems and sometimes they also make mistakes and things can break. So that's definitely something that should definitely be looked before you even print out your reports or before you even think that you're ready to have your tax professional file your taxes. Also, you need to make sure as a business owner, if you have an S corporation, that you have reasonable compensation. What is your compensation for the year? And you have to study it and make sure that it is correct and that it is properly, that you have the proper backup to support that number. Make sure that you do your research, make sure that you have your studies done, and if you are not sure at all, always seek advice from a CPA to make sure that your reasonable compensation is properly in your industry as the business owner. It's definitely a big plus, something that needs to be done. You have to make sure, talking about payroll again, that your W-2s are completed, that are sent out on time, deadline the end of January. Same thing with 1099s. Make sure that those are sent out on time to the contractor and to the IRS. And same thing with the W-2s. Make sure that everything is sent out on time to your employees. That's for their W-2s. That is another check that needs to be done before, and this is all part of your close for the year. Reconcile the W-2s, the wages on the W-2s to make sure that they match to your payroll reports. That's definitely a plus and something that needs to be done. And number 5 is year-end tax snapshot. Make sure that you know, that you at least have some idea of how much you have to pay in taxes at the end of the year. You already know what your net income is going to be. And there's obviously some things that happen on the tax side that changes the net income in your profit and loss, because there's other items that will be part of your reports on the tax side. For example, meals and entertainment, that's deductible at 50%. Therefore, the amount on the profit and loss versus the amount reported on the taxes is going to be a little bit different. There's several things that make that difference. A lot of people think that exactly what you're going to see in your P&L is what you're going to see on your taxes, and that's not correct. But that is a good practice also, that when you're reviewing your tax returns, that you also compare to make sure that the amounts are correct and they are definitely reasonable. But like I said, if you're working through your profit and loss and your accounting throughout the year, you will have already some knowledge of how much your net income is going to be at the end of the year. Have you been working with your tax professional or your tax advisor throughout the year to make sure that you're putting in place all those different items that can be done before the end of the year that will help you in save some taxes? There are definitely a lot of items that can be done ahead of time that will prepare you to be ready for the end of the year. And also, if you feel, and depending on your projections through the end of the year, that you're going to have a high net income and that you're going to be maybe paying more in taxes this year than you did in the year before, you have to work with your tax professional to make sure that you are making estimated payments as well. Maybe if you have to make additional federal income tax payments throughout the year to compensate, to make sure that you don't underpay in taxes throughout the year, because that's when you will receive some penalties and interest if you underpay in taxes. There's a fine line in your tax returns that you see if you're actually paying any penalties for underpayment. So always, I can't say it enough, always seek advice from your tax professional throughout the year. Do not wait until December. Do it every quarter. Meet with them to make sure that you have some projections and that you're doing some tax planning ahead of time that will help you save money and pay the taxes that you absolutely have to pay. Don't overpay for not making decisions throughout the year. Have you maybe maxed out your 401k? Are you taking advantage of the new items that you are able to do now that we have the new big beautiful bill? Those are things that we have been working with our clients throughout the year, and we already know or by estimated how much their tax liability is going to be. So at least our clients are ready, and it's not a big surprise depending on what the number is once those tax returns are prepared. So if you have any questions, my name is Karla Carderera. I'm a managing partner of Upfront CPA. Give us a call. We can definitely help you. Our goal is always to be your tax advisor. It's to be a partner in your business to make sure that you're definitely prepared and ready to file your taxes and to have your accounting organized all throughout the year. Believe me, you will sleep better if your accounting is organized and done and looked at by a professional.